Hey guys, so today was a pretty uneventful day while we were streaming, but we had the FOMC minutes and the market is just in a tailspin afterwards. So I thought there was some really important stuff to discuss here. Wanted to make a video about it. I believe that what we're seeing right now could end up being very significant going forward. So we really want to get a handle on this. Of course, this is like still a developing thing, and I'm sure that a lot will be written about it tomorrow. We can talk about it during the stream, which again, um, every day from 8:20 to 10:30 Eastern time. But the basic gist of what is going on is this. It's not so much of what was in the FOMC minutes, but what wasn't. So the Federal Reserve has kind of expressed some skepticism towards things like yield curve control. And when we looked in the meeting minutes, there was some more of that. But there was also some discussion out there about changing the amount or the duration of the treasuries that the Federal Reserve was buying, basically more monetary stimulus. And there wasn't any discussion of that at all in the last meeting. So when that happened, there was quite a bit of shuffling around in the markets, but ultimately the treasuries started to lead lower and then everything else followed essentially. So it was very similar to what we saw back when we had the 30-year auction, and the 30-year auction was bad and everything sold off. As you can see, as I'm recording this, the market's still going. We got about 5 minutes to the close. Um, so I want to note a couple of things here about this move, and I'll explain why I believe that this is really significant and that this is something you really want to study and learn what's going on. If I come over here to the chart, so I kind of have a chart here that I use this for my own proprietary indicator. No, I'm not going to give it to you, but what it's essentially trying to do is trying to estimate the positions or the amount of contracts being held by passive buyers and sellers. So this strong blue and orange lines are kind of like the buyer and sellers cost basis for all of the contracts that they've picked up. So you can see when we started out, we had a pretty good move down and a recovery. But when we really started going and we really started moving down, if you look down here at the bottom, the inventory, the number of short contracts being held by the shorts was practically zero, which is something I've never seen before since I've been using this contract. But basically, the shorts took all of their profits off of this move, and then we got kind of the buy the dip recovery. And now here again, when you look at the cumulative delta and everything else like that, you've got a real bender of a move. So these are not old positions. This isn't like, somebody really went short and they held it and this and that sort of a thing. No, this move down here in particular was all these people buying the dip and getting blown out. Really quite ugly. And I can also show it to you guys here with the footprint chart. That might be a little more clear or make a little bit more sense to you guys if you're more familiar with that. So here again, had a pretty good drop down, and there was actually some significant dip buying down here in the 33.79 to 81 area. You can see 17,000 contracts being traded at every handle. That is quite a bit, and on almost every other day that we've seen since the March lows, you get that much traded at a price, and we will completely retrace that move. It's the buy the dip, and then we'll go up, and everything's fine. And it's been like that literally every day. But not today, because today, once we got up to the 33.85, then we saw an insane, and I mean, just 30,000 contracts at a handle is a lot. 30,000 contracts traded up there, and then we started going down, and we'll see where we end the day at. But that's just a tremendous amount of volume. When I was watching it coming back up, and come back over to the main screen here, when we were watching it coming back up, we were seeing some really big icebergs. So, especially in that 83, 85 area, we were seeing spaces where 5,000 contracts was trading on both sides of the market, which is not something that I've seen in this market, this market regime. So essentially, like, people are willing to stick their necks out and sell today, this is it's very significant development. So we're definitely seeing a change in the way that the market is behaving, in the way that the volume is trading. And I think that this makes perfect sense because when you think about it, why has this market been going up? This market has been going up basically based on expectations that the Federal Reserve is going to have easy monetary policies and is pumping the markets with quantitative easing and fiscal stimulus and so forth. Well, this news story, the things that we see in the meeting minutes, kind of makes investors not so sure. It strikes at the heart of the key driver to this bull market. So, of course, that doesn't mean that we're for sure going to go down. I can't make that confident of a prediction, but does this make this a significant inflection point? It definitely does. So, I also want to add that the market on close was negative. So you're seeing institutions are dumping at the close. That's, yeah, it's pretty negative. I'm gonna see here. Here's the close. I didn't intend to record. A lot of times when I record this, it's like after recorded a bunch of times. Okay, so there's the close. So they did close a little bit off of the lows of the day, but only by a few points, 2 or 3 points. We'll see if here afterwards they go down. I didn't intend to time it that way, but that's the way the market is going. So again, pretty significant development. Wanted to make a video about that, and we'll talk about it some more tomorrow during the stream. So until then, stay profitable, friends.